And our first presenter is Terry Betker. He's the president and CEO of Backswath Management Incorporated. His forte is providing consulting expertise to farmers, agribusiness, focusing on strategic and transition planning, financial performance analysis, and general business management. And comes from a family farm near Souris, where he spent nearly 20 years of farming with parents and brother. So we invite you, Terry, and we look forward to your presentation here on financial tools and strategies to navigate uncertainty.
Thanks, John. Thanks for the introduction, and as well, thanks to you and the organizing committee at the conference here for providing me with the opportunity to speak with everybody and share some of my thoughts on something that for a lot of farmers has been, is, and likely always will be hugely top of mind. I was just texting while the few introductory comments were happening here just now with a farmer who's dealing with quite a bit of acute financial stress re cash flow. So it's just part of the business. And to the topic here, yes, about tools and strategies to navigate uncertainty. This is a Manitoba Agronomists conference, but the work we do, the work that I personally do at Backswath, provides me with some opportunity to speak with farmers, across Western Canada for sure, but at times into Ontario and into the Atlantic region. And farmers have more tools, more resources at their option that they can use to manage some of the uncertainty that exists in their business than I think they perhaps ever have before. And while that is of benefit to them, I think that there's still a lot of room for all of us who are involved in and support working with farm families to help them through some of the associated challenges. So I'll get into my presentation here. And okay, what I'm going to do today, well, I just completed my opening comments. I have a couple of slides or discussions or points I'd like to make about risk and uncertainty from a broader perspective. And I want to drill down from that into some of my insights on farms and management, and as I've spoken already, some of the challenges that they face with regard to risk or uncertainty. I will refer to it throughout my presentation pretty much always as risk, but uncertainty is probably a better description for what it is we're talking about. I have some tools and resources that I'd like to share with you that farmers have at their disposal. And to my point, some of what I'm going to present really didn't exist that many years ago. So more options to them, and depending on how much I talk and where the time goes, hopefully there'll be some time for questions. But to your point, John, I'm certainly happy to take questions after the presentation if there is an interest there from any of the participants here, or just engage in a general discussion. There's not much I like better than talking to people about farms and farm business management. And really then when we drill this down into a connection between risk and uncertainty, and as probably pretty well everyone on the presentation or participating in the presentation will know and understand, so certainly not news to anyone here, but that correlation between a chance of loss or gain, and then that's the uncertainty piece. And if we had more time, or perhaps you would even want to have a different presenter at some time to the conference to talk about not just the negative outcomes associated with the uncertainty, but there are positive outcomes. And it's an interesting approach to looking at a business, farms here, and looking at where they can capture some of the upside of uncertainty. But if we drill it down into the negative aspect of it, or the undesirable part of risk, when does the uncertainty become an issue? And of course, that's quite a broad discussion. But for a lot of farms, it's when the cash flow pressure becomes acute. And I'm going to speak today of a couple of the newer resources that are available that the farms wanted to put in place, tools or tactics or resources to mitigate some of the associated stress or risk with cash flow. And when it becomes acute, they're there. But the next slide takes the discussion here about when does risk become an issue into a whole other area. And what I've written there is when it spills into the bedroom. And I don't mean that to be glib, but I did mean it to catch people's attention, because by my observation, what we're talking about and how in here all of us could help farm families is understanding or helping them to navigate through the impact that risk has on their relationships, business relationships between generations, business relationships between brothers, cousins, husbands and wives that are actively involved in the farm business. And then it's a short segue from the business to the kitchen table, and then where the risk spills over into and effects on relationships. So it's broad-based, and it's difficult for a lot of farm families to get their heads wrapped around correlations of risk beyond some of the obvious ones financially, or perhaps here, thinking that there may be just the odd risk event happening here, or this next slide, similarly, a little bit of risk here. And I talked to the farmer who actually was in that tractor, and he said that was kind of an interesting day. And I'm sure that was a bit of an understatement when he and I talked about it. But risk manifests itself, uncertainty manifests itself everywhere. And then to my slide here, what is it that we're really talking about? And I'm purposed here at not broadening out the discussion to each of these areas, but really we can look at risk in 3 or 4 different classifications, through a business lens, the financial lens, or the market. And at the business, then we could further segment that down into understanding risk in terms of its impact on operations or association with operations. And then at the same time, where does risk start to impact or correlate with overall business strategy? And if we think of the tools and resources that I am going to speak with here this morning a little bit later, and they're more financial or operational driven tools to mitigate the risk. But I think there's a broader discussion of risk, and these next 2 or 3 slides, I want to comment to that. And of course, in that perspective, and how farmers then understand the uncertainty within which they're working, and where that becomes the risk that they feel, then they can retain the risk, basically take it on, absorb it themselves. They can avoid it, transfer and share it, or reduce it. And I don't think that the farmers think necessarily in those terms, in those theory-based terms, But when we talk about the tools that they have available to them, it is in that third bullet of transferring or sharing the risk that may be impacting on their business. I don't know. Well, I'll be more direct. They can't avoid risk. It's just everywhere. And perhaps there's a challenge to farms in that they get, by my observation, they get somewhat, well, complacent is too strong a word, but they get comfortable, or they get used to risk because it's everywhere. They if they're going to farm, they're going to take on risk. And I think for some of them that becomes a challenge where, yeah, it's always there, perhaps like a sliver. I just had this analogy come to mind. It's like a sliver that, oh yeah, I got this sliver in my finger, and I know it's kind of annoying, it's there and it's bothering me, and it never really becomes an issue until it starts to fester, and then I can't dig it out, and then gotta get some action to get it resolved. So maybe a poor example, but it's one that just came to mind here. The question then, if it's everywhere and they live with it, have to work within it, what do they do about it, or what should they do about it? And this is the point where in the presentation here that I want to talk about some other aspects of risk strategies, risk mitigation resources that they have, and purpose it back to the farms. And I think one of the things that farms could do to help them better understand risk and then develop their strategies with in how they deal with that risk is to increase their knowledge base. And Danny Kleinfelder talked about 4 states of knowledge, what the farmers know. In this case, I'll put the U into farmers, what the farmers know, but what they don't know, what they don't know that they don't know. And then maybe the last one is sometimes maybe more a little bit more dangerous, if you will, for some of what it is that the farmers are doing, is what they think they know that isn't so. And I spend a lot of my time working with farms in that advisory capacity, in not talking openly about profiles of knowledge and states of knowledge, but helping farms to gain a better understanding of what it is that they're working with, and I think the better that we're able to help them know of their situation and then know what they can do about it, gives them a better chance to be out in front of the risk. And one of those knowledge-based tactics that I think that they can apply is to enhance their management competencies. It might seem a little bit simplistic, but I think actually of all the tools and resources that are available to them, maintaining alignment of their management competencies with what the changes are and have been and are going to continue to occur within their business, which to me in a lot of situations just augments the risk that they work within, would be to try, yes, my point is to try to align their management competencies with them. And they can't be everything to all parts of their business. So then increasingly they look to resources such as the people here on the call and attending the conference and the meeting here, is how we work with them. Farmers all work within these 3 alignments. They either explicitly or implicitly have a vision, and it's really what it is that they're working towards. And they work within financial alignment, or past performance, and what their future financial performance is going to look like. And then on a season by season, year by year basis, they manage within those dynamics, within the constraints of their financial strengths and weaknesses, and within what it is that they're working towards for their farm and their family and themselves. So how do they align their management strategies with that and advance those concepts, to me is a function of connecting risk. And then as I was thinking about the presentation here this morning, I thought, well, what does connecting risk with the tools and resources that are there that are tactical, but then also connecting risk with that broader discussion of what can farmers do themselves to help manage some of the risk that they work within. And like the connecting part of it here is in the last bullet, I believe, and this is something that we can all help them with. And while cash flow risk is hugely, or financial risk in terms of cash flow can be really acute, I think you could argue that for a lot of farms, maybe even the majority of farms, getting on the wrong side of strategy may be the greatest risk of all. And as I thought about this, my thoughts went to, well, what is it that they're trying to work within, and then apply some of the tactics to manage or mitigate the risk. And in terms of their lifestyle, their strategy, their business strategy, what is it that they're working towards? Are they trying to grow the business? Are they purposed at optimizing profit, perhaps protecting assets, or actively transitioning to the next generation? And in the life cycle or the continuum of past and future timeline at the bottom of that illustration there, at some point or along that journey, any farm family will probably have different priorities about whether they're purposed at optimizing profit. Maybe they're trying to grow the business or transition to the next generation. So context within which to apply some of the tools and resources that are there, I think, is important from a management perspective. And I don't intend to talk to each one of these. I've just highlighted one on this slide and one on the next slide. Is in the past, farmers were, I think, more adverse to risk, and they, the future is, because I just don't see where they can be in business at the scale that a lot of them are in without accepting that risk is there. But then we have to be, and they have to be, more proactive in how it's managed. And in terms of strategies or things that they can do themselves to mitigate risk, it's the first one is, where in the strategy part of their business, if they're trying to add activities, what do they give off? And part of strategy is, sure, certainly looking at what we're going to do, but also looking at what we maybe are not going to do or going to discontinue. And for a lot of farmers, I don't believe historically that's been actively thought of. And then the fourth bullet down there, they just, from their own management perspective, need to spend an increasing amount of their focus, their time and energy on the proverbial working in the office, on the business, not out in the barn or in a piece of equipment. When it comes to finance, and I'll segue my comments here into the tools and resources that they have, farm businesses, they just, and the size and complexity within which they work, have outpaced the financial management competencies of the majority of farms. They don't, I think, fully understand, or maybe a better word is appropriately understand, debt and how to work with debt within their business to its best advantage. And for a lot of farms, financial statements are a bit of a mystery. And the last one to me is absolutely common and worrisome, and that's that for the farm business, that financial management is a default function. And from that perspective, then, and when I talk to farms, I'll have similar comments such as these two, in that they look at their business and they want to be able to achieve better financial outcomes, to make more money, but also to mitigate some of the risk that they are encompassing. But they don't know what their financial situation actually looks like. And then the next one is even more profound, and had this spoken to me more than once, is I'd like to have stronger financial performance, but I just don't know where to begin. And that's in saying that in 2021 is concerning, because I've been working with farms in this kind of a capacity for 30 odd years. And I would have made that comment 30 odd years ago, just not knowing then what I know now. And I'm going to talk to you about some tools and resources. I keep promising that, and I will get to that here shortly. And one of the resources from a knowledge base, specifically to the financial aspect of what we're talking about, is understanding where their financial efficiencies are or aren't. And the gross margin, a lot of people on this call will be familiar with that. It's just the margin of profit after we subtract production expenses such as fertilizer, chemical, and seed on a grain operation from their gross revenue. And so we work with a software program called FarmCaster, and FarmCaster can aggregate data, and then we can compare benchmarks. So the blue line here is in this case, the last 9 years of performance at the top 25% of the farms that are in the data set of the farms that we work with. And the yellow is the average. So there's a fairly narrow band for a lot of grain farms. A target performance there would be 65%. But I wanted to illustrate the gap between the more efficient farms with the gross margin, as illustrated by the blue, and the yellow representing the average. And if you could just kind of keep that visual in mind, and I'm going to jump to the next one, which is now same farms, and it's the overall operating efficiency margin. So operating efficiency is the margin of profit before we include depreciation or amortization on assets, and before we include interest. So this is EBITDA over revenue. And when we talk about tools and strategies that farmers could use to mitigate risk, and if we think of it in terms of their own management competency, by my observation, by the farmers that we get to look at their performance, there is more focus at the gross margin and less focus on overall cost control. So it's a rhetorical question, but when we're talking to farms, what are they trying to use the tools that are available to them to mitigate against? What is it that they can do themselves to perhaps look at overall cost control that would be completely in their control, and a tool that they could use effectively to mitigate some of the financial risk? Oh, the working capital then is the translation of that those margins of profit to overall liquidity. And I just of interest over the last number of years, there is just a general softening of liquidity on farms, and it changes year by year, and obviously, but over time there's just this general softening, it would appear. And you remember, these are farms just not for Manitoba. This is a prairie-wide demographic of about 150 farms. It's not a huge sample size, but because it's across Canada, or probably Western Canada, I think it's illustrative, at least of interest from an illustrative perspective. So John, that's some opening comments on just a broader look at strategies other than the actual tools that farmers have available to them to manage risk. And for the rest of the presentation, I want to drill down into those tools and resources. I just spoke in the last 3 slides about FarmCaster. There are quite a few software programs out there, other than bookkeeping programs such as QuickBooks or Ag Expert, that farmers could use to help them mitigate risk. And I've just put up Harvest Profit as another one. Granular is another one. There's actually quite a few. There's probably, wouldn't take you too long to get a list of 9 or 10, and some of them are Canadian, some of them are US, and some of them come from other countries. But if a farmer wanted to use software to actually quantify some of the risk that they're undertaking, pardon me, then they absolutely can. I'm going to spend a little bit of time when I talk to AgriStability, GARS, Just Solutions, and crop insurance about MNP's Ag Risk Management Projector. It's pretty cool. And then I don't have a bullet or any slide on Farm Management Canada's AgriShield risk management tool, but it's a really great way for farmers to gain some insight into where risk exists and manifests it, or could manifest within their business. And it does drill into the business risk, the finance, and the marketing risk. It's a broad-based diagnostic tool that's free of charge and available through Farm Management Canada's website. The president, the MNP's Ag risk management calculator. I'm stealing the slides from Steve Funk. So I will tell everybody, and for those of you who don't know, I was a partner at MNP from 1998 to 2010. So from that, obviously, I think there's that familiarity I have with MNP. But I will make the comment that when we're talking about tools and resources that farmers have to help them manage risk, I'm not aware of any other professional services firm that has the same level of a program or a resource that farmers can use to look at the different aspects of risk within their business. So the slides here from the end of my presentation come from presentations Steve made to the diploma class, or one of the diploma classes that we teach at the University of Manitoba. And he said I could use the slides, and it helped me a lot in saving a bunch of time. Steve's contact information is here, and I absolutely know that if you wanted to ask him about any of these tools or query him about it, that he will get back to you and talk to you. So the next slides here are about business risk management, and the first one I'm going to present is just an overview. So if we're going to look at actual tactical resources that farms have available with them, there's AgriStability, crop insurance, GARS, which is an acronym for Global Ag Risk Solutions, and another company called Just Solutions. And I have a couple of slides on each of these following here. But you can see by the tick boxes and by the X's what their different programs cover in terms of risk. So on the left, the production, stored grain, price loss, input costs, labor, etc. So some of the programs are more all-encompassing than others, but they all have a purpose and I'll use the word a sweet spot, depending on what the farm's need is, what their appetite is for using any of these resources, and how they think, the farmers think that any or all of these tools could help them. The Ag Risk Management Projector that MNP uses it's an interactive tool that it's not given to farms. It's worked in conjunction with a meeting set up with one of the risk management experts at MNP, but they create a financial situation for a farm. They put in historical financial information and then run a couple of scenarios. And I'm not going to go into the detail here, other than to say in the next two slides, you're going to see the tools and how a farmer can literally look and assess what their exposure is and how they might mitigate some of that exposure. So safety or scenario one has no safety net attached to it at all. And scenario two uses AgriStability, crop insurance, and Just Solutions. However, the farmers can use any combination of any of those tools that are available. I should say, John, that I was told last week that there's another private program, risk management program, that's going to become available, but I have no idea about that. The first time I had heard about that was last week, and the person I was speaking with didn't know anything other than he said, have you heard about the new risk management tool that's coming? And it was an easy discussion because I said, no, have you? And he said, yeah. And I said, well, do you know anything about it? He said, no. So I thought I would mention that here, that there may be something coming yet on the horizon other than the GARs and the Just Solutions. But this is the tool, and it's interactive. So, for example, if the farmer was working with an advisor, then they could toggle these different categories on and off, and they could watch the profile change from where the red is the exposure that farmers are under. And this is no safety net. This is just, if you get your projected crop, you're going to make money by the green bar. If you're at 90%, and then as soon as you get to 80% of revenues, then there's a loss, 135,000, and depending on how severe it is, it gets quite worse. And I would bet dollars that people on the call have had discussions with farmers since the 2021 crop was finished, where the farmers have said to them, I can't believe we ever got to that low of production. So I'm mindful of the time here, and the next slide here is just scenario 2. So this is where the farmer has toggled on taking the crop insurance, the AgriStability, and the Just Solutions. And you can see the profile of red has changed. And the two little red bars there, where there is still some residual loss, that's called, referred to as a saddle. And farmers can't mitigate very effectively against that saddle. So when we talked about taking on some of the risk, that's the risk that they can't share, that they take on. And how they manage that then is within their own financial resources, i.e. their balance sheet. And if I had one criticism of, or criticism is a wrong word, one limitation of the MMP's risk management calculator is it doesn't factor in the balance sheet and how much debt and where the debt sits on their balance sheet. But this farm is that he can use the tools and take away most of the risk, but he or she are still having to carry a little bit of that ongoing risk. Here's where now they change the demographic, put different coverage levels for AgriStability and Just Solutions. So the farmer could run unlimited number of these different scenarios. After a while, when I've been in a couple of those meetings with farmers, it gets a little bit confusing about, well, what do I need and what works for me? AgriStability looks at 5 years, and it takes the reference margin of revenue over certain expenses, takes away the high and the low and averages in 3 years, and then farmers can insure themselves against a percentage of that loss. So there's a 30% deductible, and then the government will share 70% of the gap between the reference margin and what their year's production was. It's relatively inexpensive. AgriStability usually is the first tool that triggers a payment for farmers, and meaning that the eligibility of the payment, but it's often the last one where the farmers will actually get money. And that's been one of the inherent criticisms of AgriStability, is it's just too slow and a little bit too unpredictable. I'm not going to spend
3 minutes.
Okay, thanks. I'm not going to spend much time at all on crop insurance. Everybody will be familiar with crop insurance in Manitoba, but yeah, it's a really excellent resource. Not that expensive, covers yield loss, and based on individual crops. So what I like about crop insurance, when we're looking at a farm's own ability to manage risk that they're working within, is that it's indexed to their own performance. They can add a hail insurance rider to it. And the comment that I would have about crop insurance is that compared to some of the other programs, is farmers are getting, in general, where they had yield loss this year, greater returns from their crop insurance coverage than they are from some of their private programs, such as GARS. So GARS and Just Solutions are both private insurance companies for profit. Both are headquartered in Moose Jaw. They're different. And GARS works off of the gross margin, and it's grain only, no livestock, and they can ensure a margin of profit over yield impacts and to provide some mitigation on market fluctuations. GARS different than Just Solutions. GARS has 8 different products. And I know on the agenda today, there's a presentation on parametric insurance. GARS announced last year that they've got a program for a heat blast for canola. And actually one of the seed companies has factored that parametric insurance component into their seed cost for the farmers that are buying that particular variety of canola. But this is really, there's a lot of different types of coverage within GARS, and you would need to, or any farmer would need to spend some time talking to a farmer about, just like the MMP calculator, the GARS have a calculator that they work with a farm and they say, well, if you want X number of fixed margin coverage, this is what it's going to protect you, and this is what it's going to cost you. And for this particular example here, they can get X number of dollars of coverage, but it would cost them $11.50 an acre. So for some farms, 4,000 or 5,000 acres, it gets to be fairly significant investment, but it does provide them with coverage at that gross margin. Just Solutions is actually it's a story about where the people that started Just Solutions were associated with GARS, and they broke away to run their own company. And it doesn't look at the whole program of insurance tools that GARS has. It's grain only, and it covers revenue only. So they set up a expected revenue and expected yield and crop. They base that coverage at sign up, and then they calculate what their actual yield was, what the price is going to be or was at November, and they make their final calculations based on that. When I speak with farmers across Western Canada, not too many Manitoba farms are using Just Solutions. GARS is a little bit more activity in Manitoba. A lot of interest in GARS and Just Solutions in Saskatchewan. So yeah, it's some uptake, but there is still that hesitancy about, hey, it's going to cost me, $50, $100,000, $200,000 of premium to get coverage. And the biggest concern I have about that, when farmers look at mitigating the risk that they're undertaking, is how do I then protect the risk, my financial risk? And to me, they need to have a higher degree of, farmers need to have a higher degree of understanding of what the strengths and weaknesses are in their balance sheet. Well, that's the presentation, John, and I think I've probably used up most of my time and not allowed too much time for questions and discussion.
Well, what we'll do, Terry, first I want to thank you very much for that. I appreciate it when someone can go through a suite of options and kind of drill down, put them out there. So you're getting a full round of applause here in our headquarters in Carman. There's 2 of us here. So I would ask the others to join me in thanking. And also, Terry, you were generous enough to say we don't have any questions that have popped up here yet. But what I would ask is that if people have questions, you've offered to answer them. And so I believe those questions will come through to you. And if you want to reply to them, then the others will get to see your responses. So thank you for delivering the kind of the setting the background for things here, and also offering some of the financial tools that farmers should be considering to wade through. I liked one of your first slides. There's also great opportunities with uncertainty. And I'm hoping that we can help farmers to capture those also. So I want to thank you, Terry.